your boy Jimmy. Oh, oh, no, 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 no. Straight from y'all, street to Wall Street. Anybody tells you that money is the root of all evil doesn't have any. Whoa, no. Dude, wake up, get that girl hyped up just to get a little bit. The only woman in the morning wanna turn on his Becky quick, while the average man's looking at curves like she fine as heck. I'm over here looking at tails and wicks like buy or sell. I left the chaos for the market. Nah, I don't want a street spot, I want a stock pick. I know the style got flair, trigger my stop losses, but I ain't got time for distractions. My Vivo with PFs crossing, rich with high trades from pushing high keys, straight to G's and plans to make grand. Still in my tank top, Batman pajamas, house slides in about 5 hot picks of the day, cause I like the way the dial moves. For hot dips on call, so I got options. 2 with a lot of volume, 1 with a double bottom. Now I know some folks don't understand. Am I talking about my trade or just thinking with my Mac day? You see we're different in the way we move. You move with kittens and your dogs, I move with bears and bulls. I got a green thumb, I grow at the market. Waking up with the future, stacking up some commas. I jump out of bed, make profit, eat my bacon and eggs, make profit, light up watching them candles, make profit, while I'm still in my sandals, making profit. They used to watch me move dance, roll style. Now I watch moves in the Nasdaq, dancing. Used to run from the ATF and the car. Now I run down ETF and make profit. I jump out of bed, make profit, eat my bacon and eggs, make profit. I watching them candles while I'm still in my sandals, making profit. See me and Jim Cramer been talking mad money. He said today I'm taking the risk, they got the feds coming, but I got support here with me. I call the short squeeze. You get the drop, she pulls the trigger and shuts it down. If she stays on my watch list, I might have to keep her, but I know better. I'm a true trading group lifer. Go ahead, be bold. Trader, get your squad head. I'll double top that guy, head and shoulders. Hit him up with this resistance. Watch him roll over, cause I see big moves in contracts. If I say I made 1 million a day, well, that's a large cap. You moving average, that's why you get calls, get split, get delisted and knocked off. And I'm setting the whole block off. I'm buying GameStop and selling them roadblocks off. Jump out of bed, eat my bacon and eggs, light up watching them candles, while I'm still in my sandals. They used to watch me move them packs, bro, stop it. Now I watch moves in the Nasdaq, profits. Used to run from the ATF and the cops. Now I run down ETFs. Hey, my plug that we don't trade. Right on what we do, man. Hey, Friday, Suge, Mike. What we doing, dog?
Make profit.
That TTG money gang. We making profit. We some snipers.
Hey, yo, what's up, everybody? What's going on, folks? Welcome, everyone, to the TTG live stream. Hope you guys had a wonderful weekend, but hope you guys are ready to get down to business. Hope you guys are ready to gear up for what's going to be probably another crazy week. Futures are open, obviously, and we are bouncing back. We opened up down 0.7%. We're now kind of rallying back to where futures are only down 0.1. So we're getting pretty close, to taking back the early gap down that we experienced there on futures as things continue to escalate in the Middle East. Oil prices gapped up above 100. They've since pulled back. So we are kind of reversing, at least for the time being, we are reversing the initial direction of the gap that we experience in oil prices and in S&P futures. But we're still underneath some pretty big support levels. And if you guys caught Friday afternoon after the markets closed, there were some comments made by Trump about thinking maybe he might be thinking about starting to wind down the operations in Iran. And that sent the markets flying after hours. And what was a really, really deep red day for the markets on Friday ended up actually being not too bad of a down day. We were down around 2%, over 2% at the lows. We ended up bouncing back, finishing the day down around 1%. So we took back about half of it on the back of that news or that comment that Trump made on Friday afternoon. But then over the weekend, things kind of continued to escalate more. There is still there's still attacks that are going on. There's now the possibility of energy infrastructure, and then Iran was threatening civilian infrastructure like water distillation plants and like other electricity grids and everything else like around the region. So there's also a deadline that's been put in place. We have, I think, like 22 hours maybe until the deadline that Trump put on, gave Iran 48 hours to open up the Strait of Hormuz, or said that they were going to take out their power plants. And then Iran said, if you touch one of our power plants, and we're going to go after energy infrastructure and electrical grid and water distillation infrastructure within the Gulf. And they actually put out a list of some of their targets. It's all civilian targets. None of the targets that Iran had listed was like military establishment. They're all like water distillation plants, energy plants. So people see that and people hear that, and you look at that as, okay, that's an escalation, because now you're not talking about military targets. Now you're talking about, water for people that live in the desert. And that would then be seen as obviously a big escalation with the conflict that's going on over there. So you kind of had this like whiplash type of move where after hours on Friday, the markets rallied, and then all of a sudden, but then all these news headlines came out over the weekend, and now futures opened up, and now you're back to the downside. There's a few things that are at play right now. You have obviously the news flow and the news headlines that are coming out of the Middle East, but then you also have the technical, the technical stance of what's happening in the markets, and you have a lot of like market data, as far as fear greed index, as far as volatility, as far as momentum, as far as sentiment gauges. And some of the sentiment gauges are getting pretty washed out. I don't necessarily feel comfortable enough to sit here right now on this live stream and tell you that, hey, I think the markets are ready to rally tomorrow. Or like I think the market's ready to bounce back tomorrow, because I don't feel that way here just yet. But there comes a point in time when markets sell off, and you guys saw this during Liberation Day. You've seen this during a lot of the different market sell-offs that you have. When markets get flushed out, they get a little oversold, and you get this like snapback bounce. Now, that snapback bounce does not necessarily just mean that the markets go back to their all-time highs, as when we do finally get that snapback bounce, which we will, and it'll probably last for maybe a week or so. It'll take us back up into some pretty heavy resistance levels that I would then look to be shorting. I would look to lighten up on long positions into those resistance levels, as I do not believe that reversal would take you back to all-time highs. I believe that first bounce that we get eventually then gets sold back off. So I want to be very clear with what I'm saying. I'm not telling anybody that's it tomorrow, go ahead and just pile into the long-term portfolio. I still see a lot of risks out there that I'm not so sure that the bottom is quite in yet. Matter of fact, I don't think that the bottom is in yet, but that doesn't mean that we can't trade a relief bounce. And I think we are getting pretty close to the point where we could be looking at an oversold, washed out type of price action, where we could catch maybe 2 or 3 days of upside. You sprinkle on top of that technical setup. Maybe you get a positive news headline over the week that kind of coincides with that. But I'll just tell you guys this now. We're getting close to the point where we're a little oversold. If there's any type of positive headline this week about the Strait of Hormuz or about de-escalation, I would expect the markets to move higher. And I think that the easier move this week, now listen, I come on these live streams every week and I tell you, this is what I think the market's going to do. This is how I plan on making money. This is what I'm going to do with my own money. This is what I'm going to trade. And I kind of feel like, I feel like the money that we'll make this week, the majority of it might actually be to the long side. I think that at this point, this might sound crazy, and some people probably think I don't know what I'm talking about. It's fine. I've been doing this for 20 years. I know what I'm talking about. You might not agree with me, but that's fine. Doesn't mean I'm right. I could be wrong. I'm just telling you giving my thoughts. I covered my short last week. Okay. So if you guys have been following my channel, I went live on at the end of last week, and I told you guys that I had flattened out my short. Right, I was short futures. I had covered that position last week, and I'm completely out. I'm no longer short the overall market. It doesn't mean that I won't go short again, because I absolutely have full intentions of going short again. But we made enough money. The markets had enough of a pullback. We felt like we got a little flushed out there on Friday. You also had the, triple witching on Friday too, that kind of exacerbated some of those moves to the downside. And some of that leverage was kind of just getting blown out. And I covered the short. And I'm looking for us to get a little bit of a bounce now. So my watch list coming into this week is a watch list for, again, it's for this week. Okay. It's not necessarily a watch list for tomorrow, but my watch list this week, I'm really lining up a lot of long setups because I think we're getting close to a bounce. And when we get that bounce, I'm going to go long. I'll probably stay long for at least 2, maybe 3 days. How long I stay in that bounce for the upside is going to be based on whether or not I get any type of positive news out of the Middle East. If there's a piece of positive news, like real positive news, like an actual positive news headline, not just like one comment, right? An actual positive development. If I get that with the situation that I see in the markets right now, I'll probably stay long for a few days. Okay. And probably catch a move. You'll probably catch a move back up into the high 660s. So my target for the relief bounce is going to take us back up into this zone that you see right up here. Okay. So we're going to look for this, take this right back up into these high 660s, maybe even get into the low 670s. All right. Maybe get into the low 670s. And then that's it. I'll get off that train. I'll get off the bus at that time. I'll lock in the profits on the long, and then I'm going to probably look to re-enter into some short positions because I think that the resistance level that's going to be in the mid 670s. I think it's going to be way too heavy of a resistance zone that I don't think you're just going to rip right through it unless, the war ended tomorrow and 100% traffic went through the Strait of Hormuz, which obviously is not going to be the case. So that's kind of what I'm feeling. It's kind of what I'm feeling, guys, coming into this week. Just giving you kind of a broad-based kind of setup there as the markets are trying to bounce back. We're now down less than 0.1% on futures as we are trying to climb this. We are trying to climb this back. So, now you guys kind of have an idea of where my head is at with everything and kind of what it is that I'm thinking as we kind of get into this week. We are pushing higher right now as I'm talking. Futures are pushing back up towards those early session highs. Is what we're kind of seeing there. So I'm going to go through with you guys my analysis on the overall market. I'm going to go through with you some of the gauges and some of the sentiment reads on why I feel like the markets are getting to the point where we might be getting a little bit of a bounce. We might be setting up for a little bit of a bounce. I'm going to give you my list of stocks. I've got a bunch of they're all tech related. I got a bunch of different tech related stocks that I like for the long, if and when that bounce does happen. And I'm going to jump on it when we see it. All right. I'm going to jump on it when we see it. All right, so we're going to get into that. We're going to talk about exactly how I'm going to make some money this week. My name is Michael Edward Parinati. I go by Michael Edward. I am the co-founder and head trader of True Trading Group. I'm really excited to have you guys with me here tonight. It's a really incredible time. It's unprecedented time in this market. I know a lot of people are worried and scared. You got war going on. The markets are going down. Everyone's freaking out. But I'm going to walk you guys through. No need to worry, okay? As long as the markets are open, we can make money from it. We can go short. Right? That you don't have to just sit there and just be held victim to your 401k, your long-term portfolio. We can get in there. We can get messy. We can roll our sleeves up, get our hands dirty, and we can go short. We can buy put options. You can go long inverse ETFs. There's plenty of ways for you guys to make money as the markets go down. All right. So if you're not part of True Trading Group and you guys maybe you're new to this channel, this company, this platform, this group, which is over 10,000 members, True Trading Group exists to help you learn faster, trade smarter, and profit sooner. It's what we're going to do here tonight in this live stream. We're very proud to be partnered with and to be powered by the Nasdaq, Benzinga, OpenAI, Data Bento, TradingView, and also Unusual Whales. All these companies are partners, have partnerships with True Trading Group that allow us to build out the fintech platform that is TTG. We are a fintech platform, folks. This is not just a chat room with trade alerts and courses, although we have all of those things. Right? Our trade alerts are fantastic. We had 7 professional traders that trade in front of you live. They share their screens with you. They send out all their alerts. Right, we have a cumulative win rate on amongst all of our executions, amongst all the mods collectively, of just around 80% for the last 6 years now. So we have all of those things if you're just looking for trade alerts. But TGG is a fintech platform that received the Benzinga Fintech Award for Best AI Analysis Tool. Okay, this is a platform built on education backed by experience, strategies proven through decades of success, and tools that actually think and are fully customized for you, the individual user. True Trading Group is a trading education tools and community company that serves retail traders and investors globally. Over 10,000 members in 114 different countries. Our mission is to help everyday market participants learn faster, trade smarter, and to build long-term consistency through structured education, live mentorship, real-time tools, transparent trade discussion, and global community. Okay, this is together with TTG AI and True Trading Group. TTG AI is the company that owns all of the AI component and the AI tools on this fintech platform. But the two companies deliver a connected ecosystem that honestly carries traders across the full life cycle of their trade, from awareness to education, research, analysis, planning, education support, monitoring, coaching, review. The result's not a chatbot. It's not some AI add-on. It's not some research wrapper. It's a trader operating system. Okay, research that adapts to you through a 31 key adaptive memory system that knows you, the individual user, and adapts to you as you use it more. Chart intelligence on institutional grade charting, multi-agent trade planning with specialist agents for consistent analysis, live monitoring of institutional order flow, real-time news intelligence from over 80 professional sources, natural language back testing, courses, private social trading community, AI-powered audio intelligence that transforms content into interactive learning, broker-linked execution so that you guys can actually connect your brokerage account to the platform so you can actually place trades through the AI tools. All of these things make TTG the fintech platform that it is. It's every product feeds context into a central intelligence layer, and every product draws context back. Nothing operates on an island by itself. It's all completely connected, and that is Mari. Okay, Mari is our AI. That's the recipient of the Benzinga Fintech Award for Best AI Analysis Tool. So when you guys are joining True Trading Group, you're getting access to a trader operating system. It's not just a chat room with courses. Okay, and these tools and resources are what allow members to sit here today and tell you that they're making money. That's the whole thing, right? You guys are here to make money. You're not here necessarily to make friends. You're not here necessarily to, you're certainly not here to talk politics. We don't tolerate politics here at True Trading Group. Go to your Facebook accounts for that. But that's what this is really all about. So you guys are on here to figure out, how can I make money from the markets this week? What's going on? The market's going to crash. Are we going to bounce? Whatever it is. These tools and this platform is what has allowed our members to make money. And you shouldn't just believe me just because I say that our members are making money. You should believe our members are making money because they tell you that they are making money. So let's actually ask members of TTG real quick. Those of you that are part of True Trading Group, if you are making money, you guys are becoming better traders because of TTG. Do me a favor right now and go ahead and type the number 1 inside of chat. Again, go ahead and type the number 1 inside chat. If you are a member and you are making money, you guys are becoming better traders because of TTG, just go ahead right now and type the number 1 inside of chat. Those of you that are not members, pay attention to how many people you see type the number 1. These people that are telling you they're making money are no different from you. If they can do this, then so can you. They don't have more money than you. They don't have more time than you. They're not luckier than you. If they can do this, then so can you. As much as I would love to tell you that the reason why these people are successful is because I'm the world's greatest trader, I am not the world's greatest trader. I'm a damn good one, but I'm not the greatest. I've been doing this for 20 years. I began my trading career working at T3 Alpha Fund in New York City, my first job out of college. They had me go through a training program before they let me touch a dollar of the fund's money. And then shortly after that, we had the Great Recession, 2008, great financial crisis and big stock market crash. But that also was the same year that I went on to receive one of the firm's Trader of the Year awards. So now you fast forward, I'm the co-founder and head trader of TTG, along with my team of 7 other professional trading mods and over 30-person staff. We've helped thousands of members from all over the world to reach their goals. TTG has nearly 11,000 members now from 114 different countries. So truly a global community. We day trade, we swing trade, we do long-term portfolio investing as well. We trade stocks, options, crypto, futures. We literally do it all. There's something for everybody here at TTG, no matter how much time you have, no matter how much money you have in your account, no matter what experience level you are. no matter what your previous experiences have been in the market. We have members in TTG that just opened up their first brokerage account a week ago. And then we have people that have been trading full time for 20 years. We got former market makers for the Nasdaq that are actually members of True Trading. We have financial advisors. We have asset managers that are members of True Trading Group. So there is a very wide array of members from all walks of life that are part of this community. And those members are part of something really special. And I'm very proud to be on this journey with each and every single one of them. Hope you guys are excited to kind of get down to business here tonight. And let's talk about how we're going to make some money. There's a lot going on. Yes, we make money when the market goes up and when it goes down. Join us in chat every day, says Lady Boss. Yes, it's true. It is true. Let me check on futures. Where are we at? We go green yet? No, not yet. No. A lot of resistance up there. If you're watching, I'm on the June contract. 65.60 is a pretty nasty resistance level there. 65.60. It was a nice little line. It was a nice little area for the markets on Friday as well. And when we kind of broke through that 65.60, that's when we really kind of accelerated to the downside. And that's when we kind of got that flush out. But we can't get back above that level right now with futures. If we do get back through 65.60, I would probably have to say at that time, if you get through 65.60, that we're probably going to make a push back to 65.85 and kind of get into the area that we were at on Friday when we had those comments from when Trump made those comments. So I do think that we are going to be due for that type of a move. But for now, you can't get too excited about the long until you get above 65.60 on futures. All right, that's kind of the line in the sand for me that I'm seeing there. All right, beautiful. So there we have it there. Those of you, I'm just curious, how many people do we have on this live stream that are not members of True Trading Group? If you guys are not a member, can you type the letters TTG, please? Just real quick, just type the letters TTG if you're not a member. Just want to kind of gauge the audience here, see how many people we have that are not part of the group. Just go ahead and type TTG. Take you 2 seconds if you guys don't mind. Then I'm going to dive in. We're going to go over the S&P and we'll go over the SPY first. Just go ahead and type TTG for those of you that are not members of True Trading Group. All right, we got Linda. How are you, Linda? What's going on? My boy Sean's in the house. What's up? CPR, what's up? Joe's No D Grass, what's up? Robar, how are you? Beautiful. All right, so we got some new faces here that are with us here tonight. Those of you that are not members of True Trading are wonderful. Here, we got Brown BZ, very nice. Here's what I'll do. Actually, before I dive in, David Freed, you were a past member. David, let me ask you a question, brother. If you used to be a member, would you like to be a member again? Because David, if you would like to be a member again, I'll do something special for you tonight, brother. Since you're on the live and you used to be a member, I'll give you a crazy deal that you'll probably won't believe me when I offer it to you. If you do want to come back and be part of True Trading Group, if you're interested, send a text message to 1-888-621-2127. Again, that's David Freed. You used to be a member. If you would like to rejoin and come back, I'll give you a real special offer if you would like to come back. So just send a text message to 1-888-621-2127. I'll make you an offer you can't refuse. You know what? Honestly, that goes for anybody that's on this live stream right now. If you're not a member, those that typed TTG, I'll give you a similar offer. If you guys do want to join True Trading Group, just send a text message. Send a text. We'll do something special for you guys. Send a text message, 1-888-621-2127. I'll give you guys a better deal than we've ever offered on a stream before. Okay. Yeah, David, you plan on coming back, Dave? Shoot us a text message then, because I'll give you an offer here now. Okay, I'll give you an offer here now if you do want to come back, Dave. And this goes for anybody else that is not a member of True Trading Group. If you guys are interested in, joining the community, using the trading operating system that we have, and following some of the mods and joining, your sister wants to join. Very nice. Okay, so listen, Angela, David, anyone that's not a member, text us right now. All right, I've got Brett and Luciano. Okay, I've got Brett and Luciano that are standing by. Luciano will be the one that'll make you the offer that you can't refuse, just because his name is Luciano, and that makes a lot more sense if Luciano gives you that, not Brett. So send a text message 1-888-621-2127. You guys are going to be really, really, really thankful that you did. Okay, you're gonna be grateful that you did send a text message once you guys see the offer that I'm willing to give you. Those of you that are not members that would like to join. So Angela, send us a text to get your sister started. I'll give you a great deal. David, you should be a member, and then those of you that are not part of True Trading Group, send that text message as well. The only thing that I ask you, if you're going to send us a text message to that phone number, just make sure you send the word "start," because by texting the word "start," that's going to allow us to then communicate back to you. If you don't text the word "start," we might not be able to respond to you depending on your carrier restrictions. So just go ahead and, again, text the word "start" 1-888-621-2127, and we'll get you guys a really special offer that you're not going to be able to refuse. I guarantee it. Okay. So I'm in a good mood. You know, times are crazy. People are worried. Recession odds are rising. And I come on this live stream every week, and I tell you guys, I shoot you straight. I don't sugarcoat anything. I'm not a perma bull. I'm not a perma bear. I just tell it how it is. I tell you what I'm doing with my money. I'm bullish when I think markets are going higher. I'm bearish when I think markets are going lower. And if you've been following my live streams for a while, at the beginning of February, I came on this YouTube channel. I told you guys that I think the markets are getting ready for a pullback. I didn't foresee a war happening in the Middle East. That wasn't the reason that I thought the market's going to pull back, but that really accelerated the process. And now here we are going through what is your first, real pullback of the year. We still haven't reached a correction in the S&P. We're down around 5% or so, 5 or 6%. A correction's 10. So we're not even at a correction yet. And I think it's entirely possible that we do continue to sell off. I think it's entirely possible that we do see a deeper correction. But on the way down to that correction, you're going to get these snapback bounces that are going to occur. I'm not telling you that I think it occurs tomorrow, but I think we are getting a little close to a point where we're getting oversold. We're not there yet, but we're getting close. So I'm going to go through with you guys my thoughts on the markets right now. So as we stand right now, we just kind of rejected off that 65.60 on futures. We're pulling back to the downside. And the resistance level that we all have to keep our eyes on is the low 650s. Okay. Those lows, well, way to go. Sim Sultan says, I no longer have to drive for Uber. Thank you, TTG. Ayo, yes. Yes. I love that. I absolutely love that. You no longer have to drive for Uber to help make ends meet. Yes, I love that. Congratulations. Congratulations. That's more time now in front of the screen, right? More time now in front of the screen. Let's keep on going, man. Let's keep on going. Beautiful. Right? Absolutely beautiful. Congrats. Seriously, congrats. Really nicely done. All right. Are there buy opportunities on any of your long-term 2026 forecasts? So the Dell Michael, so let me actually address this one question first, guys, and then I'm going to get into my analysis on the SPY and then my watch list. Are there buy opportunities on any of your long-term 2026 forecasts? So, and I told this to everybody that's in True Trading Group. Every year I put out a market outlook report. And every year I tell you, this is what I think the market's going to do. These are stocks I'm buying. These are stocks I'm selling. This is the stocks I think are going to do really good this year. And when I published that outlook, I published at the end of December or the beginning of January. Now, obviously, when I wrote the report this year, I did not envision a war in the Middle East, and I did not envision oil going back over 100 and continuing to press inflation pressures higher, and then the Federal Reserve not being able to cut 2, maybe 3 times this year, which was the whole basis of what I thought was going to happen in 2026, was that you were going to get at least 2 rate cuts in 2026. I didn't think we were going to get 3. I thought we were going to get 2. But with oil now going back above $100 a barrel, that is going to put inflationary pressures over the course of the next couple of months. The longer that oil stays up here, the more inflationary pressure it's going to be, the less likely the Fed is going to be able to cut rates in the second half of the year. The markets are already pricing out rate cuts in general. in 2026. The markets are now pricing in your next rate cut not until 2027. And that is being driven by the worry of the inflationary pressure by the price of oil. Okay. Inflation was already being sticky in like the mid twos. Now that you've got, oil shooting to the upside, oil gets into everything. Literally the price of oil is in everything. And the longer the oil sits up here, the less likely it is the Fed is going to be able to cut rates because inflation is going to be elevated. And that's a problem. And what you're seeing is you've actually seen the odds of a recession in 2026 are actually beginning to go up. We're now up to just under 37% chance of a recession, which is still low. 37% is still low. In 2022, it got over 60%. It got to like 64, 65% in 2022, and we did not have a recession. So, you're at 36.8 last I checked. That's up from like 25 before the Iran war started. So you are starting to see that move to the upside. And I think we are at a point here where this whole situation has to de-escalate very, very soon. Otherwise, my outlook for 2026 changes. And if this does not de-escalate soon, I'm not going to be buying the sell-off into the correction, rather the bounce you get off of it, because you will get a bounce off it once you touch correction. That bounce, I will then start lightening up in my long-term portfolio. I'm going to start raising cash because I think that the markets would then eventually turn over and would then continue to sell off much lower. And you'd be looking at a bear market. A bear market would be a 20% decline. A correction is just 10. So that's kind of, the way that I would be changing that. So I'm not buying anything in my long-term portfolio right now. I'm not. I don't see the coast being clear for that here yet at all. So I'm not ready for that right now. I will let you guys know when that time comes, but that time is certainly not now. So we'll deal with that. We'll cross that bridge kind of when we get there. Okay. Now, what I will go through now, let me get back to the overall markets. Let's get back to the SPY. This level that you see on my screens, like the low 650s, was a beautiful level of support in the fall. We broke that level. We breached it on Friday. Now we're still trading well underneath it. The cash version, if the cash market's opened right now, we're sitting like literally down here. So we are well underneath that level. So what I'm starting to think is that maybe with the escalation that we've seen, if the deadline that Trump put on Iran to open up the Strait of Hormuz, if that comes and goes and there is nothing, and there's just an escalation further from there, and if the U.S. does actually start to hit some of Iran's power plants, then that could flush us out to the 630s. And that is where I would say we are going to then get to the point where if we get to that area, then at that point, we're going to look at the markets being oversold. Okay. And then at that point, one more flush down into the low 640s into the high 630s. That's going to be the point where I will say that the markets are oversold. And then we're going to look for us to get a bit of a snapback bounce from there. Now, a couple of things that I want to go over with you and why I would think that. One, you can see drawn on my screen already, the support level that's in the high 630s. It's like 637, 638. Okay. That's a nice little support level back from last year. Okay, so that's one thing. But the other thing is this: investor sentiment has shifted very rapidly to extreme bearishness. 52% of individual investors express bearish sentiment over the next 6 months. Okay, in the AAII survey of the week of March 19th. That is the highest since May of 2020. There's the highest bearish reading since May of 2025 following the tariff announcements. Okay. The bearish sentiment has risen 23 percentage points since February. That is the largest increase in over a year amid the war that just broke out with Iran. Meanwhile, just 30% of retail investors are bullish. That is the third lowest reading since the tariff announcements of 2025. Bullish sentiment has declined for 8 consecutive weeks. And as a result, your bull-bear spread is now down to negative 21.5 percentage points, which is the widest gap, okay, since the tariff announcements of 2025. And it's in line with the bear market levels that we got at the bottom of the 2022 bear market, okay? So we have a very, very deep bull bear spread that is negative, obviously favoring to the bearish side. Now, when you see sentiment that gets that extreme, it sometimes ends up being a contrarian indicator that tells you that sentiment has gotten too negative, and the slightest little news headline could rip markets back to the upside because positioning gets a little bit too lopsided, and then you get this little bit of a snapback. So that's one reason that also coincides with me telling you I feel like this level could give you a bounce area in the 630s. The other thing I want to point out to you is just a historical context. So the S&P is down around 5 or 6% since the war started, okay? We are now 15 trading days into this war and into this sell-off. 15 trading days. In previous geopolitical conflicts, okay, U.S. stocks, on average, bottomed at around day 15. Now, this is using 30 major geopolitical shocks since 1939. So you go back to 1939, and from 1939 till present day, there have been 30 major geopolitical shocks that have caused the market to sell off. Many of them were wars. Okay. Some of them weren't wars. Some of them were other, but many of them were wars. 30 major geopolitical conflicts since 1939. And of those 30, the average bottom was around day 15. The average bottom. And after the typical bottom, the average recovery lasted on average for 40 days. Now, this is just a historical context. This is not my prediction. I'm just giving you some history, little history lesson, right? Just a little bit of a history lesson. Okay. So it bears mentioning because when people get excessively bearish, usually that's when you get a little bit of a snapback. And like I said, I started this live stream off by saying, I don't think we're excessively bearish yet. Okay. But we're getting there. We're getting there. And with all the escalation that we've experienced over the weekend, maybe it's tomorrow. Maybe it's tomorrow. But I'm looking at this level you see on my screen, a little bit further lower from where we currently sit. Another like 6 or 7 points to the downside. And I'm going to start looking for a long. I will. I'll start looking for a long. It'll be a trade. I'm not going to be buying in my long-term portfolio, but it'll be a trade. All right. It'll be a trade. And that's what we're going to do. And then resistance levels. Okay, on the bounce back, one resistance will be, pretty much the close. Well, this is actually the after hours close. This is the after hours close. The actual market close is more down here. So that's actually the after hours close that you see on my chart right there. But I would look for resistance back up there in the low to mid 650s. I look for that to be resistance. And the only way I think you break through the low to mid 650s is not just from a technical bounce, but I think you're going to need a fundamental news catalyst to get you through that. And if you get through that, you should get right to the low 660s, and then you look for resistance to be there again. And then the only way I think you break through that is if the news headline that got you to the 660s is a very, very, very significant positive news headline, not just, something minor, right? And then you'd have a chance to get up into the 670s, and then I would absolutely be getting out of your longs at that point, because that resistance I think is going to be far too great, and I will be getting short back into that zone if and when we get there. Okay. So this way now, I hope everybody is on the same page or understands exactly where my head is at and what I'm going to be doing and what I'm thinking about with regards to the overall market. Okay. Now, because I'm sitting here telling you, I think that we're getting close to an oversold, kind of bounce. And again, you might have to start the week short. I might be short tomorrow morning, and I'm sitting here telling you, watch for the long, but I might be short tomorrow morning, but by Wednesday, Thursday, Friday, I could be long. So, and I don't go live every single day on here. So I want to give you guys kind of context there. Let's go over some of the stocks that I like for the long, if and when we get to that point. All right. Because there's a couple of chart setups that actually look pretty good, and one of them is going to be Alphabet. Alphabet has done such an incredible job of holding together here while the market sells off. Look at this. The stock has just gone sideways for a month. we're not, you take a look at the Nasdaq. The Nasdaq has been selling off. The S&P has been selling off. But you take a look at Alphabet, and Alphabet's hanging in there. And you know what? One thing that doesn't really bother Alphabet, oil prices don't really bother Alphabet. A war in the Middle East doesn't necessarily bother Alphabet. And I think you have enough of a support level down here, right? Look at the support level that's there in the high 290s. This is just, to me, this is just an excellent support level that if the S&P gets to a point where I feel like we're oversold and I feel like we're getting ready for that bounce, if Alphabet is still above the mid 290s, then that has to, in my opinion, that has to be a long. Right, you'd have to capitalize on a long here on Alphabet if you're above 295, 293, if and when the market gets to that bottoming point. So again, I'm not telling you to go long these things tomorrow. I'm telling you when the market finally gets oversold and we're getting ready for a bounce, these are the stocks I'm going to go look to go long. Okay, I like the 290s in Alphabet for the long to the upside. Okay. That is Alphabet. Next up, we're going to take a look at Apple. Apple, another one, doesn't necessarily care about what's going on in Iran, right? And I think you have a nice support level here in the 240s. So you've got support here in the 240s, right? And then you also have this yellow line, which is the 200-day moving average, right? You also have a long of the 200. You have the 200-day moving average, and you have this area that used to be resistance. Now it's acting as support. So again, if the markets get oversold, I would look for Apple. I'd look for Apple to bounce. I'd look for Apple to bounce off the 240s. Like 245 is a really nice support level, and I think that you're safe there to go long. Again, if the SPY can get down here, let me go back to the SPY. If the SPY can get down to here, okay, if we can get down to there, and Apple is still above this level, I think you go long. Okay? So that'll be Apple. So again, I'm looking for what I'm starting to do, guys. I've covered my short position, right? If you guys are just tuning in, we said a couple hundred more people just joined the live. If you're just tuning in, I've covered my short in the futures market. And now what I'm doing now is we might have a little bit more downside here, but I think we're getting within the next day or two, I think we're getting close to an oversold kind of flush out. And then I'm going to look for maybe longs into the back half of the week. So I am going over with you guys right now. What are the stocks that I'm going to go long when I feel like the markets have gotten oversold and when I think the markets are ready to give us a snapback? I don't think we're there yet, but I think we're getting close. All right, so Apple and Alphabet are two of them. The next one up is going to be AMD. AMD is another one that has done a very good job of holding together while the markets have sold off. Okay, and you can see here the 190s is a beautiful support level on AMD that has been support for the last 4 or 5 months. Okay, and you also have this yellow line, which is the 200-day moving average that has been holding support for the last 3 weeks. Then you have this downtrend resistance line over the last 2 months that forms this little bit of a descending triangle. And if AMD can get above 205, I think AMD pops. So I would just wait AMD out, wait it out. If the markets bounce, wait for AMD to get above that downtrend line. You get above that downtrend line, I think you can open up and you can get a push that takes you maybe to like the teens, like 213, 214, 215. Somewhere around there, let's look for that. Even if you have to pull back in a little bit first, like even if you have to pull back into here first and then bounce, so be it, right? But I'm looking at AMD against this 200-day moving average. You have this nice downtrend resistance line that's in place here against this nice support level in the 190s. If you're still above the 200-day and the market looks like we kind of flushed out and we're getting ready for a bounce, if you're still above that 200-day in AMD, we're going to look for that one for the long, guys. Okay. And then last but not least, Palantir. Now, the reason why Palantir, I'm more neutral on Palantir. Palantir has been trading in a range for the last couple of weeks that is clear as clear could be. And I just switched to a 15-minute chart just to show you guys the range that's in place here. I mean, just look at this thing here. Look at this range. Isn't that nuts? Look at that. Look at that. So what I'm going to do, I'm going to take a look at this, and I'm just going to say to myself, where do we, I'm going to let the range, I'm going to let the range break. But now what I want you to be conscious of, and this is my favorite, this would be my favorite setup. Okay. If I get this set up, I'm going to absolutely love it. And I'm going to explain it to you. Some members of True Trading Group might already know what it is. So let's say the market flushes out, because I want you to also take a look at this level that you see right here. Right? See that level right there around 147? So this level right here is like 149. This is 147. So if the market sells off further and Palantir breaks 149 and drops to 147, and then when it gets to 147, it reverses off 147 and then gets back above 150, that is going to be a buy signal for me. I will go long right there, and my stop loss will be right here. And then we would look for Palantir to snap back to the top end of the range. Okay. You guys see that? Azadaku says, I'm going to do the opposite of everything you said. Go for it, man. Go for it. Let me know how it works out for you. Go for it. Maybe I'm wrong. Maybe I'm wrong. Maybe I'm wrong. I mean, what do I know? I've only been doing this for 20 years. You know, what do I know? Worked at a hedge fund, received the Trader of the Year award. I mean, I don't know it. I don't know what I'm talking about. I actually, I stayed at a Holiday Inn last night. So it made me feel like I know what I'm doing in the markets. I feel like I was going to start a YouTube channel and just start talking about, open up a Lightspeed account and just start, just go to town. You know? So I just feel like, why not, right? All the cool, everyone's doing it. I see everybody on Twitter talking about, everybody on Twitter talking how much money they make. Let me give this day trading thing a shot. Anyway, so those are my thoughts there with Palantir. Those are the levels that we're going to focus on. So Palantir, Apple, Alphabet, AMD. Those are the stocks I'm going to look at, guys. So I think that we're getting close. You know, I think we're getting close. But I don't think we're there yet. You know, I don't think you should just, start going long tomorrow. I don't think we're there yet. But I'm looking for like the 630s. I'm looking for like the 630s to maybe be the long. So again, listen, I might be short tomorrow. Like it's very possible tomorrow morning, I might be short. I'm going to wait and see what happens overnight. We'll see what the news headlines are. We'll see what's going on in the Middle East when we wake up in the morning. I'll see what the futures are doing. I'm going to take a look at oil. If oil's up, if oil's down, and who knows, maybe I'm going to go back and maybe tomorrow, I might be short tomorrow for that one more move to the downside. And then maybe by like Wednesday, I could be long if we get a little oversold, and then we can look for a snapback. So that's kind of the way that I'm thinking about coming into the week, guys. Those are my thoughts. That's where my head's at. Anybody have any questions for me? Again, I am no longer short futures. I have covered my future short position. I was in a swing trade over the last week. I've since covered out of that position. I'm no longer in it. If I do go short tomorrow, it'll most likely be a day trade only. I probably won't swing that short. It would be a day trade. Because like I said, I am going to be thinking about looking for maybe some places we can get a little bit of a move. All right. Thoughts on gold and silver? I think gold is going to bounce soon too. Like I like the GLD around like 400. I like the GLD down at that level. I think the GLD is a little oversold too. I think we're getting to the point where I'm going to look for things to start to bounce back. But again, I'm not looking for that bounce to take us back to all-time highs. Like I'll probably ride that bounce for a couple of days and then flip out of it because I don't think the bottom is in yet. What about options trading with these levels? Kaishal Alexander. So listen, the levels I'm giving you, so like at your trading group, we trade options, we trade stocks, we trade futures. We have moderators that trade options. We have moderators that trade stocks, moderators trade futures, members, you can trade obviously you can trade options obviously at these levels too. So like if I go long, if I go long, let's say I go long Alphabet or something, you can go long like the 300 call. If I go long Apple, you can go long the 250 call. If I go long AMD, you can go long the 205 or 205 call, 210 call. It's the same idea. You're just using a different vehicle to trade it, right? Like you're just using an option. I would use an equity, but it's the same analysis. So I would recommend go with the weekly option. So go with Friday's expiration and go with it with a strike price that is out of the money at the time you enter. But if you're right and the stock does what you think it's going to do, it will then go into the money. So let's say, for example, AMD, let's say, is at 203 and you think it's going to go to 210, buy the 205 call. Slightly out of the money when you buy it, but if you're right, it'll be in the money by the time you sell it. Okay. So Apple, if Apple is 248, you think it's going to go to 254, buy the 250 call, right? So like and use Friday's expiration. Okay. So that would be a little tidbit there. Now that's if you're going to day trade, if you're going to swing trade it, if you want to scalp, then you can go for some of the shorter expirations. If you're going to trade like the SPY, you can go at a 0 DTE or 1 DTE if you're a scalper, but I would not trade a 0 DTE if you are not a scalper. Okay. I would not, if you're not a scalper. Okay. Because time decay on the 0 DTEs will kill you if you're in that position for too long. Silver, kind of a similar concept here with gold, but I just don't see as much of a support level for SLV as I do GLD. So I kind of like the GLD long better. Like I got nice structure here at 400 on the GLD. SLV, you don't really have that. I mean, you have a little bit of structure here, I'd say around 59. So maybe into 59, you can look for there to be a little bit of a bounce from there. But not as clear of a support level as what you have in GLD. What do I think about shorting the airlines this week? I don't necessarily like that, Mary. I don't like shorting the airlines. That's a tough one. That's a tough one, honestly, because so the airlines are getting punished from two different sides here. They're getting punished because the TSA are not getting paid, so no one's going to work. You can't fly. The wait to get through security is like 6 hours long. No one's making. You can't fly. Flights are getting canceled. It's a total disaster. But then on top of that, you have the price of oil skyrocketing, which means jet fuel skyrockets, which means their costs increase. So airlines are getting hit twice as hard, but they've already sold off pretty hard. And, if there is a positive news headline that comes out this week and oil prices drop, I like the support level at 85 on United Airlines. 85 is a huge level for United Airlines. You guys can see on my screen right here, I have that line drawn across as a huge support level. So I would be careful short into, I'd be careful shorting into 85. 85 I'd rather almost wait for 85 to break and then I'd feel better shorting it then. I just don't want to I don't like beating a dead horse. Like after a stock drops so much, I don't like shorting it then. So I'm a little iffy on it. Mary, I'm a little iffy on it. I'll watch it this week. Yeah, I'm not sure if you're a member of True Trading Group or not, but I'll watch United Airlines and the airlines this week in general. And I'll let you guys know if I see an opportunity for us there. Because United Airlines actually is a nice stock to trade. There's pretty decent volatility there, and there's pretty good range. So you can trade United Airlines. All right, so United Airlines will be one that we'll keep an eye out for. Okay? So that's it, guys. All right? All right, so futures are still down, like what, down 0.5%, it looks like here. So we're still down 0.5% here. How do you like SIT? I don't like it. CPR. I don't love it. So here, I'll tell you this. I don't know. I don't know much about this company's fundamentals. So if you're asking me more for like a long-term portfolio type of thing, this is not the type of stock that I would put in my long-term portfolio. It's too small of a company. So I don't know much about it from a long-term portfolio perspective. Okay, so if that's the question you're asking, I can't really give you too much guidance on that. You probably know much more about the company's fundamentals than I do. It's not a company that I follow. From a technical standpoint, if you're looking for a quick trade on it, you've got a nice support level down there around 5.5. And I'll draw a line right across it to show you. So here you guys can see this 5.5 level on GSIT. Used to be heavy resistance back in 2024. Then it was heavy resistance in July of 25. Then you gapped above it. Clearly there was a piece of news here or something. It pulled back. And ever since then, it's been holding support at that 550. Now you're testing the 200-day moving average. If the stock breaks below 5, I would just get out of that. I would get out of the trade entirely because it probably continues to bleed. But if it can hold 5.5 or so, you could have an opportunity for maybe a bounce that takes you back into the mid-6s. So that's just chart-wise what I'm seeing. All right, that's what I'm seeing chart-wise. Okay? So that's it, folks. There you go. There you have it. All right. Now, again, listen, if those of you that are not members, right? If you're not a member of True Trading Group, I told you guys this before, and I'm being serious. I'm going to offer you guys something. You guys want to check out our trader operating system. You want to check out the community, the chat room, the alerts, the AI tools, the fintech platform. You want to check it all out. Awesome. Send a text message. Text the word START to 1-888-621-2127. I'm going to give you guys an offer that we've not given before on this YouTube channel. I'm not going to say it on this YouTube channel because I don't want it out there publicly. So, because I don't want people to come at us later and be like, hey, well, can I get this deal? Because I'm offering you guys something that we've never done before. It's a deal it's a better deal than we've ever done before. Mike, what are your thoughts on the yen carry trade? Okay. Echo Park, great question on the yen carry trade. My thoughts on the yen carry trade are as follows. The yen carry trade really got blown out in August of 2024. And I'm not saying that the yen carry trade went away because obviously it did not. It'll always be there. But I don't believe that the leverage exposure is as severe as some people on social media are making it seem, because a lot of the people that got blown out in 2024 deleveraged that trade in general. And the yen carry trade works when you know exactly what the rates are going to be in Japan. And for the last several months, it has been very clear that they are moving rates. And there's been a lot less certainty about where those rates are going to stand. Now, in August of 2024, when rates moved and that disrupted everything with the yen carry trade, that was a surprise. Since that happened, there has not been such a clear cut that rate is going to stay the same, that we can just borrow in yen with a particular rate and then invest in, and then switch it and invest in dollars. And then you can make the spread on that trade and you can borrow cheaply and then invest it here and get yield on it here in the US. In order for that trade to work, you need to feel comfortable that the rate is going to stay where it is in Japan. And for the last several months, that has not been the case. There have been a lot of talk with the new government there and what their policies are going to be and whether they're going to move rates, they're going to raise rates, they're going to do this, they're going to manipulate the yen. There's a lot less certainty there. So the leverage on that position, if you're a financial institution, if you're a hedge fund, your leverage on that is not going to be as severe as it was in August when you were surprised. So I'm not saying that that trade still can't unwind and it still can't blow up, because it definitely could if something was to happen with the Japanese yen and it was going to move severely, or if the dollar was going to move severely, which could happen. But I just don't think that there's as much leverage there that needs to be unwound as there was in 2024. 2024 was like a peak yen carry trade unwind moment because it was a shock and it was a surprise. You don't necessarily have that anymore. So you can still get forced selling, because what will end up happening is in order to close that trade out, it forces selling in things that they don't necessarily want to sell. You sell what you can, not what you want in a situation like that. So it could bring forced selling into equities. It could bring forced selling into tech stocks and AI stocks, even though it has nothing to do with the yen carry trade at all. It could just be a deleveraging and a margin issue. And that could be the case. But I will tell you this, if the market is ever to sell off in a situation that is caused by a yen carry trade unwind, you usually typically want to buy that sell-off. And the reason why you typically want to buy that sell-off is because stocks are being sold, not because they want to be sold. They're being sold because they have to be sold. If Alphabet or AMD or Nvidia were to drop because of a yen carry trade unwind, that is forced liquidation of stocks that they're not selling because they no longer think Alphabet is a good investment, or they no longer think Nvidia is a good investment. It is forced liquidation. And when you have a forced liquidation, if price is to be disrupted because of mechanics, not because of fundamentals, you usually want to be a buyer of that. In August of 2024, I very aggressively bought the Japanese yen carry trade blowup, because I will always buy forced selling, not fundamental selling. Meaning like the economy's going to shit, inflation's going back to 6-7%, the Fed's going to raise interest rates, we're going to have a recession. Those are reasons when I am not going to be a buyer of that downward price action. But if you tell me that the market drops 3, 4, 5% because the yen carry trade got unwound and earnings are still fine, I'm just giving you an example. I'm not saying this is the case today. I'm just giving you an example. Earnings are fine, labor is fine, like monetary policy is fine, but all of a sudden there's this yen carry trade unwind, I'm going to buy that. Most of the time. Not all the time, but most of the time. So probably contrarian to what you might have thought I was going to say, maybe. I mean, I know there's a lot of people on social media that, are very adamant about that being, what's going to completely crash the market. I don't see it. I think the bigger risk to the market, you want me to talk, we'll talk macro now. The bigger risk to the market that I see right now, it's yields. It's yields. And you guys, we have to pay very close attention to this, because when we go back during a couple of things that we've noticed is you have to identify Trump's pain points. What are the pain points? What does that mean? The pain point is, how far is he willing to push a disruption before it gets too much? And he's like, all right, that's enough. The tariff announcements, Liberation Day, when he announced those tariffs, the market sold off and bond yields rallied for days. And when bond yields rallied to 4.5%, okay, that was when 4.5% on the 10-year is when Trump decided that's my pain point. As soon as we got over 4.5, okay, as soon as we got over that 4.5, then you saw him pause the tariffs, the 90-day pause on tariffs, and then the 4.5, we went to like 4.6. Once you got to like 4.6, that was the top on the 10-year. He paused tariffs, and then the bond yields pulled back. That's all Scott Bessent. Scott Bessent is a brilliant market mind. I don't know if many of you may not know who Scott Bessent is until he became Treasury Secretary. But Scott Bessent is a Wall Street guy. He's an ex-hedge fund manager. The dude's worth over $500 million. Okay, he is one of the most successful hedge fund managers that there are. Okay, he's a very, very smart guy that knows the bond market very well. And he knows exactly how far the bond market can be pushed before it breaks. And as soon as it got over 4.5%, all of a sudden, Trump gave a 90-day pause, bond yields dropped, and markets bounced. Then go ahead and take a look at oil. When oil prices got above 110, that couple was it 2 or 3 Sundays ago, the very next day, what happened? Trump came out the very next day and he said it like 25 times throughout the course of the day with every public appearance that he had. He said, oh, the war is going to be over soon. The war is going to be over soon. The war is going to be over soon. We're way ahead of schedule, way ahead of schedule, way ahead of schedule. The war is going to be over soon. The war is going to be over soon. And he talked oil back down under 100. Those are his 2 pain points. Once oil gets to like 110, 120, that's a pain point. Once the 10-year yield gets over 4.5, that's a pain point. I fully expect, and right now the 10-year is at 4.4. You're just underneath 4.4. So if the 10-year gets to 4.5, I would fully expect to see some type of language, some type of posturing, some type of policy shift that would make the markets calm down and make yields drop and make equities move back to the upside again. That's why I am coming into this week. That's a little bit more macro stuff. It's a little bit more advanced analysis. Is why I really didn't talk about it right now. But since we're kind of talking more macro stuff, it's part of the reason why I'm looking for a bounce towards the end of this week. If bond yields continue to rally Monday and Tuesday, let's get to 4.5. Let's get to 4.5, 4.52. That I think is the pain point. You will probably see a shift. You'll probably see some type of statement from Trump that would talk that 10-year yield back down. The U.S. economy cannot handle a 5% 10-year note. We cannot handle it. I'm telling you right now, if the 10-year goes to 5%, we are having a recession. It can't happen. And Scott Bessent knows that. And then if Scott Bessent knows that, that means that Trump knows that. So if you get to 4.5 or 4.6, watch for something to change. Be ready for it. Don't anticipate it, but be ready if it does. And have these stocks on your list, right? Apple, Alphabet, AMD. These are the stocks I'm going to look at. If this happens, if this shift comes, you don't want to be a deer in headlights. You don't want to be like, oh my God, the market's ripping. What's going on? The war is over. Oh my, and you're just shell shocked and you can't focus. Everything's moving and you miss everything. Don't let that happen. Be ready for this. Have it in the back of your mind that this is a scenario that might play out. And if the scenario does play out, you know what stocks to look at. You have a plan. If this, then that. That's how we make money. That's how we do it. Okay? So we're getting close to those pain points. Pay attention to that stuff. That's when we can see the market shift. And if those pain points coincide with a SPY that's in the 630s or 640 in that support level and you get oversold, it's the perfect combination for a snapback bounce. And if we get it, we'll be all over it inside True Trading Group. I wish you guys the best of luck this week if you're not a member. For those of you that are members, I'll see you guys bright and early tomorrow morning. We'll start things off on the right foot. We had a wonderful week last week. Let's keep that momentum going. Let's start this week off on the right foot. If you are not a member, send a text message right now, 1-888-621-2127. I will give you guys an offer that I've never done before. Trust me, you're going to want to hear it. If nothing else, send the text just to hear the offer, okay? Trust me, you're not going to say no, all right? Have a wonderful rest of your night, folks. Enjoy your evening. I'll see you guys tomorrow. Thanks for tuning in. Subscribe to the channel and smash that like button. Make sure you guys show some love. I'll see you all tomorrow. Take care, folks.